Hello friends, this is Raj Sastri from Raj Option Trading. Today I want to talk about selling put options. It's an income strategy and one of my favorite strategy. So with that, seller of a put option will make money if the underlying stock increases in price or stays the same or decreases slightly. So that's why there is a lot of probabilities here where you can make money. That's why it's one of my favorite strategies. And seller of the put option has an obligation to buy the stock at the strike price. So that's why, if you have a favorite stock that you really love and the stock has dropped a lot, you could even sell a stock put option at a lower price. If the stock comes to that price, you can buy the stock at that price. Otherwise, you will keep the premium for selling the put option. That's why it's one of the great option, and there is a lot of probability of success here if you do this right. So with that, let's look at what are the criteria here. So generally, you buy a put option or you sell a put option because you're a seller here when you have bullish outlook. So typically you want the stock to go higher to make money. And the risk is unlimited to the maximum, equating to strike price less the premium paid. If you bought a stock with at a strike price 30, your risk is really from 30 all the way to 0, which is theoretically not unlimited. And maximum reward is limited to premium you received because you're selling a put option. You are taking a risk. That's why you get a premium. That's yours to keep if the stock goes higher. And this can be combined with other strategies, especially when the stock price is high. You could really, sell a vertical spread here versus the outright put option or a naked put. That's why it can be combined to limit the risk here. And typically, you want to sell put option when the IV percentile is high. So that way you bring in more premium. And you have to identify a clear area of support. So that way stock may not go below the support level. And at the most sell, about 40, 45 to 50 or even 60 at times, but don't go beyond unless, it's one of your favorite stock like Apple or Tesla you're very bullish about. And passage of time or theta decay is your friend here when the stock price is above the strike price. But if the stock price is below the strike price, then the theta decay is your enemy. So typically look at the delta when you want to sell put option. Look at the delta around 15 or probability of touch around 30. We'll look at this as we go into the chart in Thinkorswim and look at some of these numbers here. And avoid the stocks with the heavy debt load or stocks generally going down south. So you want stock to go higher. Avoid the stocks which are slowly churning lower, and the stocks with the heavy debt. You want nice growth stocks here which are temporarily down for some reason, and take advantage of temporary weakness and sell some put option. So with that, let's look at when to sell and when not to sell put options. So best time to sell put option is after a big negative news. Think about an earnings miss, FDA rejection, stock tanks big time, but historically stock has done well. So take advantage of such weakness here. Typically after this event, soon after volatility races through the roof, that's a good time to buy and sell put option for a nice premium. The analogy folks try to give many times is sell the insurance when the house is on fire. So that way you can sell a insurance at a higher price, but house is already on the fire, so you don't need to pay too much for the house. So that's the analogy here. So when there is a blood in the market, that's when the premium is high. You can sell some put option. Make sure you don't overdo it, so that way you're not in too much obligation or you're not taking too much risk. And typically sell the put options on growth stocks that are temporary on a temporary weakness. So these are growth stocks. They got a nice trajectory, but due to some reason the stock came down pretty hard. That's when you sell these put options and take advantage. And many times, I sell put options on my favorite ETFs. Think about QQQ, Spider, IYR, IBB, XBI, XLV, SMH. There are days when stock market drops like 200 points, 500 points. That's when you sell some of these put options. Everybody's afraid. That's when the premium is high. Don't overdo it. Sell a lot or two, so that way you make some money in your balanced portfolio. You already have a lot of stocks, you have some margin available to you by the broker. Utilize it, so that way you can outperform the market by selling some put option. Think of it like a easy money, so that way you can really do well beyond the averages. And don't be afraid of assignment of put option. That can be a great opportunity. I have a lot of put option assignments. I typically don't sell put options if they're on loss, unless it's really bad. But if I like the stock, I'm okay with the option assignment, because many times they are the great capital appreciation vehicles for you, and they will typically bounce back very nicely after a temporary downtime. And typically, lighten up when the market is up, because in the put option, you're not making too much money. Your maximum money that you'll make is limited. It's capped. That's why lighten up when the market is up and buy during when the market crashes. That's the best way, especially for these indices. When there's a big downtime, Dow Jones drops, everybody's throwing the towel. Sell some put options on QQQ, SPI, IBB, all these ETFs here. When the market is up like 200 points up, 500 points up, like last week, lighten up, sell some, buy it back and make some money that way, and wait for next slump. That's the best way to buy and sell put options. That's how you kind of make money, taking advantage of this rocky market. And bad time to sell put option is after accounting scandal. Think about stock like Enron. There is a huge scandal, and don't sell put option. There is a good premium. There is a reason for it. Don't fall for the trap. Management is cooking the books here. Not worth it. And if the stock is deteriorating slowly, no point. There may be some good premium, but don't do that. It's not worth it. Instead, look for the growth stocks, and avoid the options with the low open interest and high bid ask spreads. You're not going to make too much money here. It's difficult to trade those. They're not too liquid. And don't take on too much margin. I know broker gives you a lot of money because you have a lot of asset with the broker, but don't take on too much margin, because as market tanks, these put options will weigh you down. That's why just have a small allocation to sell put option. Don't overdo it. That way you're not exposed, because if there's a huge downturn, these put options can make you fall into margin, which is not worth it. So with that, let's look at a little more a pictorial way on when we can sell some of these put options. Here, think about your favorite stock here. Your favorite stock is trading around, say, $40 here. That's the current stock price. And you are feeling good about this stock. There is some temporary setback. There is some maybe earnings miss or FDA rejection, something along those lines. Stock tanked down. Maybe right now it's at 40. But there is a strike price around 30 here, maybe 45 days or 50 days out. And it's bringing you premium of $2 right now. You could sell a put option below the stock price. Stock is at 40, you sell it at 30, you collect $2 premium here, or $200. That's how you sell a put option, below the current price on your favorite stock, down on a temporary weakness. Right now IV percentile is high, stock is sold off. That's when you sell put option here and make a nice premium here. So here, as you look through here, this is your last zone. You got $2 here. That's why you're right now, if the stock goes below 28, you'll start incurring the loss here. But if the stock stays above, say, 30, which is your strike price, that's your profit zone. This is why, this is how you kind of, buy a stock option, sell put option. This is how you select your strike price, typically below the current price of the stock. and it's typically around the support level or just below the support level on your favorite growth stock, down on a bad news. That's when you buy put option, sell put option, and earn some premium. If for some reason stock comes to 30, I think at least many times I just buy the stock. It's okay for me to get assignments, but if I don't like the stock, I'll just buy back. I don't get assigned, so that way I buy back. So that's why I love selling put options. I will not overdo it. I keep a small allocation, maybe say 5 to 10% of my account, around that range, so that way I don't get burned. So with that, let's look at few stocks which are good to sell put options right now. So as you look through here, we got my favorite stock here, PagSeguro. It's a Brazilian-based fintech play here. Stock is down big time, as you can see here. 10-day 29%, 1 month 32%. Stock is turning around right now, so it's a good time to buy some put option. Given there is a high IV percentile, indicates you can make some good premium here. And RSI is low, 26, very low, indicating stock is sold off. This is the best time to sell put option in these type of scenarios. It's a growth stock, nice sales growth, low debt, very low debt here. Stock is sold off, a high IA percentile. I would sell put option all day long in these type of scenarios, and make some money that way. If PagSeguro comes down, I would buy PagSeguro at my strike level, strike price. And then you got a few more here. KLIC, same story here. High IV percentile, low RSI, and nice growth level. Companies making money. There is a profit margin here. This is an ideal candidate to sell put option. And I got my favorite stock here, TREX here. TREX had a analyst downgrade. Stock came down big time. Look what happened to IV percentile. IV percentile shot up. Stock is oversold here. Stock came down. Best time to sell some put option here and make some money. Stock is turning around, as you can see here, in one day. Then as you look through here, we got StoneCo. StoneCo right now, as you see here, stock is going higher, but at the same time there is nice juicy premium here with the IV percentile 81 and low RSI. You could even sell some put option on StoneCo here, even though stock has made a move. And then we got few more here. We got Align Technology. Stock has been dropping. It's one of my favorite stock here. You could sell some put option or even vertical spread, a credit spread here. Given stock is at a higher price, as you can see, 589. And then you got BRKR, again one of my favorite stock here. As you can see here, this stock is also turning around after a big drop here. You could sell some put option on BRKR, make some money that way. And we got two more here. ResMed, one of my favorite stock here. Right now down big time, trying to improve here. You could sell some put option. And then we got NVS. All these stocks, whether you sell put option, earn some premium, or you could also buy stock outright, because this is also a good time to buy the stock outright also. And what we'll do now is we'll go to Thinkorswim and look at a few stocks and few option chains here and see how to spot some of these nice opportunities to sell put option. So with that, let's jump into Thinkorswim here and look at TREX. So TREX, let's bring up the chart here. As you can scan through here, nice looking chart. I love TREX. Right now there's a temporary weakness. As you looked at the numbers, it's a growth company. Stock is doing nicely. Right now, huge drop here. Stock is trying to improve. Look what happened to IV percentile. IV percentile went up the roof here. Volatility is increasing. IV percentile is 54 right now. And stock is trying to improve here. On the balance, volume is rising slowly. Check-in money flow is still trying to stabilize, as you can see here. So what you could do is you could go to option chain here. Look at the option chain at the high level. Right now we got calls traded 656, puts traded 600. Folks are really thinking where to go. They're betting on both sides right now. So as I look through here, let's go to option chain here. Right now, if you want to sell put option, you could go 62 days out. That may be a better idea here. I know it's a little bit longer time frame. Typically 45 to 50 days is a good time frame, but for TREX we could make an exception, go with 62 days, which is okay. So as you look through here, keep looking here, we got 93, which is stock price. We got 70 here, 75 here, and we got 80. So as you look through here, keep looking at delta. Delta is 16 at 80 strike price, and probability of touch is 38. So what you could do is really, if you are really very conservative, you could sell a, naked put at 70 at 75 strike price and earn 70 cents, something like this. You could earn 70 cents, which means you're getting $70. If the stock hits 75, you could buy the stock outright at 75, which is a nice bargain price. Many folks are a little more, they want to take a little more risk. Stock is at 93. You could sell a 80 strike price stock here. Put option here. Probability of touch is 38, a little higher. Delta is 16. Typically, folks sell put options, conservatively at around delta 15 or 16. You could do that. There's a nice money to be made here. You could sell this here, and as you can see here, you'll make $130. If the stock comes to $80, you could buy the stock outright, or you'll get assigned if it goes below it. Otherwise, you could sell the put option, earn some money here. Or you can, if the stock comes below, you could even you can buy back the put option at a little bit higher price, which you'll incur a loss there. So that's the other way. If you want to be a little conservative, you could also do a strike. You could do a spread here. You could do 85, 80, 70 spread if you want. So that way, you want to be a little, cautious. You could sell a spread here, vertical, and you are selling 80 and you're buying back 70, which is a $10 widespread. So that way you limit your loss to $10. And right now you're earning a premium of 95 cents. If you confirm and send here, your buying power effect is 845 and your max profit is $95. You could your break-even price is 75.05 here, which is a conservative strategy because you're limiting your is a defined risk strategy, as you call it. So that way, if the stock goes down to zero, as an example, you'll only lose $905. You don't need to worry. So many people like this strategy here. You already have a nice portfolio. You are trying to supplement your portfolio growth by selling some put options on your favorite stock and take it from there. And we look at maybe one more here. Let's look at PAGS, which is a Brazilian company, fintech play. As you look through PAGS here, let's look at the chart quickly. So nice looking chart. I love looking at chart like this. Big drop, came back up nicely, big drop, trying to come back here, as you can see here. And look here, we got IV percentile shot up earlier. Now it's trying to decide where to go. Still a high IV percentile. You could sell some put option here also. On the balance volume is trying to increase a little bit, and staking money flow is also trying to increase, which is a good sign. And right now, as you speak, its stock is bearish, but red line wants to come down, blue line wants to go up, which is a good story. So with that, let's go to option chain here, and same story here. We could sell 65 days, 62 days out here. Look at the put call here. So stock is at 37. So if you sell a put option around say 30 or so, you'll make a nice money here, 80 cents. I think that's a good one to sell. Look at the delta, which is 16, which is a good one. Probability of touch is below 50, which is around 43. I think this is a good one to sell put option. You could just sell, collect $80. If the stock comes below $30, you could buy the stock outright, or you get assigned, or you could sell, buy back your put option for a small or for a loss if it comes below 30, which is your strike price. This is a good way. I love to sell put options on my favorite growth stocks, when they're temporarily down like this. And we look at one more here. For that, let's go to, let's see here, StoneCo, again, one of my favorite Brazilian company. StoneCo is also a fintech play, as you all know. And if you go here, look at StoneCo. Stock is kind of sort of, it came down so hard. Now it's trying to go higher. Look at the IV percentile 81. Look at implied volatility is increasing. So that's when you sell put option. But this one has got some nice DMI level. We can have a bullish crossover pretty soon. On the balance volume is rising. Check-in money flow is rising, indicating folks are buying this stock here. So with that, you could go to option chain here. I would go, maybe in this one you have a choice here. You could go 41 days out or 62 days out. You could do 62. And as you look through here, keep watching, delta here. You could do around delta, say 16 or so here. You could sell this one at 30, or you could even do 31, but 30 is safer. You can collect $75 here and go from there. If the stock comes below your strike price, which is right here, we sold at 30 here, you'll get assigned, which is also a great way to buy stock. Or you could buy back your put options at a loss if it comes below your strike price, and take it from there. So with that, this is how I sell put options. I love to sell put options on my favorite growth stocks, which are down due to some temporary weakness scenario. But I know the companies are good. I'm not afraid of assignment, and I will not overdo. I will have a small allocation for selling put options, so that way I can do better than these S&P 500 and other averages. This is a great way. You'll get some, you can play with the house's money here and go from there. So with that, I got a few cheat sheet for you. When you want to sell put option, your outlook is bullish. Make sure RSI is below 35 and IV percentile is 50, and sell put options with a 45 to 50 days to expiration. Make sure delta is around 15 or so. That'll do it. And make sure you like the company, and these are growth stocks, not some stock which is down due to some accounting scandal, and take it from there. With that, thank you very much. Happy investing and trading. Please subscribe.